All right, guys, good morning. Happy Wednesday, October 23rd. In about 15 minutes, we have the IMAX Q3 Earnings Call. Results are already posted. I put them in Discord on the YouTube community tab and out on X if you haven't seen them yet. Q3 was a bit of a challenging quarter for the domestic industry in general. However, not for IMAX. And I'm sure they'll be talking about that in the earnings call today. Demon Slayer absolutely, it was their #1 film globally for Q3, and it blew the numbers off the hinges. So IMAX is going to have a very good quarter. I think they said best Q3 ever, amidst a 11% downturn in the overall domestic industry for Q3. So good job for them. And remember, just in generalities, as we're listening to this call today, IMAX, and we'll put the map up on the screen, IMAX has a huge global footprint with a lot of screens in Asia, and that really helps them and differentiates them from, your Cinemark or your AMC, which don't have a presence in Asia. Let me bring the chat down here so I can see it. And really what I want to hear from Rich Gelfond today at IMAX is more insight into Q4 and 2026. Once we get past all of these Q3 earnings calls, maybe the first week in November, I'm going to really sit down and spend a day doing quarter by quarter forecast for next year. We got to get that done in early November. We got to know, especially if you're investing in AMC and thinking about the vote, we got to know what the next 4 quarters look like. Not just the year, but by quarter, what's the cash flows look like. Andrew, good morning. Kimber, good morning. Masad Salim, good morning. James, howdy. I was checking some of our, while we were waiting here for IMAX call, I was checking some of our momentum plays yesterday just to see how everybody's doing. Let's get rid of open. Beyond, kind of like we were talking about last night, it's going to struggle today. I did finally watch that YouTube video from the capybara guy. And, I have not really been paying attention to him at all. But he did a quick 20 or 30 minute YouTube video, I guess, a day or two ago, telling people his price target was around $6. It went up to $8.80. That's pretty good. And he did a reasonable job, I think, of telling people to take profits, which I think is good. Now I'm seeing he's already pumping another ticker, which is fine with me. But some people are getting really mad at him, like, bro, you started this movement with Beyond and you're already moving on to another ticker. The pump already happened on Beyond, and it's on its way back down. So now if you're choosing to stay in Beyond, you better start assimilating all the coming news and the upcoming vote and Beyond for November. And maybe we'll talk about that this weekend. I'm not super interested in being a long-term shareholder of Beyond, but maybe, I'll go through the proxy this weekend and see if there's any hope of saving this company with the recapitalization. There's some new 13Ds out. It looks to me like those are just big investors that got shares out of the conversion last week that are doing their filings. I don't know that those are new conversions. James says he had a fantastic day yesterday and beyond. And Donut, I love it. All I want to hear from you guys is, Tony, I listened, I peeled off some profits, and I'm sitting in the green, or I'm completely out and in the green. Someone was asking me in the comments last night what to do about options they have expiring Friday. I mean, look, if you get up on options, if you get up on call options, sell them and take the money. You can't diamond hand call options in a squeeze play or a FOMO play. If you made over 100%, some of y'all were making 1,000%. You gotta peel that money off. Don't be greedy. Forget about social media price targets. All these people saying Beyond's going to 40 or 100 or whatever. If you're up on your call option, take the damn money, because they can bleed out quick, especially when they're high volatility options, high IV. IMPP, we were looking at it last night. It did have that spike on the Trump news, but it came back down to earth this morning, so I did not do anything with that this morning. And the other one that we were just kind of watching was YYAI. I know some of y'all were thinking perhaps this will be in play today because it's so cheap and beyond money. People exiting that trade are going to be looking somewhere to go. I don't know. It's already down 18%. We'll keep an eye on it after the market opens. But honestly, well, let's see. For the next hour, I'm not going to be looking at any other tickers. We're going to be just looking at IMAX. And for those of you that, like me, much like me, invest in the entertainment sector, let's just look at all of our movie exhibitor stocks this morning. AMC is at 276 in pre-market. IMAX is up about 3% at $33. Cinemark, $26.51, and Dolby down 3.5%. Come on, Dolby, what's up with you? DLB. I think I had a 12-month price target on my chart here for Dolby, didn't I? Maybe not. It is in the demand zone. It's actually even lower than when I bought it back in April. And if you are looking for a profitable company with tentacles in multiple areas, Dolby's not just a movie theater company. Obviously, it's one component of their overall package. I need to look and see when the next earnings is for Dolby. It looks like it's late November. This is a good company to consider as a ancillary entertainment ticker. IMAX. Back when I bought it originally at 15 bucks. We had set a price target of $32 for IMAX, and that was a 12-month price target that I set in June of 2024. Well, sorry, I said by end of year 2026 it would hit 32. We already hit 32 a year ahead of what I had penciled in here, so pretty good trade. Cinemark, I have August of 2026 for it to hit about $36. And if 2026 is as good as we think, I think there's a good upside potential here for Cinemark. They're going to be running at capacity. So we'll see. Dark Ace says, burn my fingers and beyond, learn my lesson. Yeah, I mean, If you haven't traded one like that, it is a lesson, Dark Ace. Don't feel bad. Everybody's got to cut their teeth at some point. But always play the momentum, play the chart, and use social media as entertainment, because most of those people have no idea what they're talking about, and they're sharing false information. It was a great hype, a lot of reason to be excited, but you gotta be unemotional about these, and also learn who is not giving you accurate info and who's trying to help. It is called tuition, Dink. Yes, sir. Good morning. Coffee time. What do we have? Oh, my Texas Longhorns. My kid gave this to me for a Christmas present. Hook 'em horns. Masad Salim says, why do you think 2026 will be a good year for the box office? We'll go through this slide deck, and you'll hear Rich Gelfond, the CEO of IMAX, talking about expectations for next year. And so will the Cinemark CEO, and then so will Marcus Corp. And then eventually when we get to the AMC earnings call, they'll talk about it too. Everybody is expecting, based on the slate of movies for 2026. Here we go. It's on page 15 of the slide deck. We got carryover from Avatar. We got the movie Mercy, Project Hail Mary. We got Super Mario, Michael, Mortal Kombat 2, Mandalorian, Toy Story 5, Supergirl, Minions 3, Moana, Christopher Nolan's The Odyssey, Flowervale Street, Resident Evil, Street Fighter, Hunger Games, Narnia, Avengers, Doomsday, and Dune Part 3. I mean, there's some major, huge tent poles in there. What we really need to do if we're investing in this industry, though, is understand quarter by quarter. It might not matter so much if you're investing in a Cinemark or AMC, Cinemark or IMAX, but for AMC, you must understand the quarterly. And so I will be talking about that in the coming weeks once I finish my full predictions by quarter. It's going to take me a day to do that. The longer I delay it, the more accurate I'll be. So I'm not in a rush to try and get that done. Let's see if we got music still here or not. Yep, still got music. Jeff says, what if Beyond actually hits 10 or 20? I mean, it's under $3 right now, Jeff. I don't know how you get it back up. We were talking about it last night. Sometimes these trades have a second spurt of activity, but typically they need to fall down considerable amount to the next level of support, which for what I'm seeing on Beyond is probably around the $1 or $2 level. Then you get another little bump, but they rarely, I'm not going to say never, but they rarely go past this first wave of investor excitement. Once this kind of dies down, now you're dealing with long-term holders. There's going to be people that are long-term holding. And if you're stuck in that boat, I'll do some analysis of Beyond this weekend and what I think is going to happen over the next year. You need to understand the November proxy and the amount of dilution that is headed your way in a month. It doesn't matter. Don't worry about that right now. Andrew says, we are excited about the overall evolution of the movie industry. Great movies with cult-like followings. I'm super excited about some of the titles at the end of this year and a lot of these for next year also. What do we have to finish up this year that I'm planning on seeing? I'm going to go back and see Sinners again. I'll probably go to the Dolby instead of IMAX if it's offered in Dolby. Our IMAX here is not that comfortable. They don't have the nice seats like the Dolby, and it's much further away from me. Predator Badlands in November. I'm actually looking forward to that one. Running Man, yes. Wicked, yes. I'll go watch that. If they reshow the first Wicked, I'll go rewatch that in Dolby first. Zootopia, I don't really care about, but I know a lot of the kids will like it. Rolling Stones, I will go see that. And of course, Avatar. I don't know what this is. Is this a reshowing of the original Shining? I need to go look at that. I'm not sure what that is on the schedule there. All right, here we go. I'm going to shut up.
Surged past our full year total for 2024 with 142 through September. And we are approaching 100 installations year to date. We now expect to hit the high end of our guidance of between 150 and 160 installations for the full year. You've heard me say that IMAX has been moving into a new position, that we've been steadily building something bigger. Throughout the year, we've delivered operating results that exceed expectations and transcend the broader marketplace. Early on, many thought our full year guidance of $1.2 billion in global box office would be difficult to achieve. We're now very well positioned to deliver on that guidance. Following our Q2 earnings call, our stock dipped, with many noting that the Q3 Hollywood slate looked soft on paper, and we proceeded to deliver a record quarter. IMAX is quite simply a different company than it was just a few years ago. This quarter is the latest and maybe the clearest example yet on how far we've come. We're consistently delivering a diversified, dynamic portfolio across Hollywood blockbusters, local language titles, and alternative content. and we further separated ourselves from exhibition as a result. In Q3, domestic box office declined 11% year over year. IMAX was up 29% in North America, and globally, IMAX was up 50%. In prior years, when IMAX posted big results, you could usually point to a single defining title: Avatar, Top Gun, Oppenheimer. But now, our performance is increasingly driven by the full breadth of our content strategy. In the third quarter, we had a big Film for IMAX Hollywood hit in F1, for which we dramatically over-indexed. But we also had a powerhouse Japanese language release in Demon Slayer: Infinity Castle. We hosted successful music events from Prince and the Grateful Dead. We flexed our muscles in horror, not historically a genre associated with IMAX, with strong openings for The Conjuring and Weapons. We even leveraged the IMAX experience to breathe new life into legacy titles, most notably with our successful re-release of Jaws. IMAX is not just a premium format. We're a platform for event content that spans genres and the globe. And that diversified portfolio and the marketing prowess of the IMAX brand as a beacon of must-see theatricality make us much more valuable to our studio and exhibition partners than ever, which continues to drive strong installation and sales activity. Because audiences in 89 countries and territories around the world know that for awe-inspiring experiences, you must see it in IMAX. The third quarter saw the conclusion of our record run of consecutive Film for IMAX blockbusters through the summer, but it also demonstrated our ability to drive success beyond releases shot with our cameras. The halo effect of IMAX extends across a wider collection of films, events, and experiences than ever. F1 the movie was our highest grossing Hollywood release of the year. With $97 million worldwide to date, more than 15% of the film's total box office on less than 1% of the screens. Our success with F1 was powered by our deep collaboration with Apple on the film, the latest example of how IMAX has emerged as a premier partner for streaming platforms. We now have 4 blockbuster openings on the year: Sinners, Mission Impossible, F1, and Tron Ares, for which we've generated at least 20% of the domestic opening on just over 400 North American screens. That's a feat we've achieved less than a dozen times in our entire history, and 4 of those came in the last 6 months. It's also been a watershed year for our local language strategy, as evidenced most recently by Demon Slayer. The global anime phenomenon has earned more than $73 million to date in IMAX. It's our biggest Japanese film of all time. It delivered our biggest September opening ever in North America, an astounding feat for a foreign film, and we indexed 19% of its domestic debut. We're optimistic the film will secure release in China too, where recent Japanese anime titles, including First Slam Dunk and Suzume, have played very well for us. We've now generated more than $356 million in local language box office year to date, shattering our previous record of $243 million set for the full year 2023. And international films account for 36% of our global box office year to date, up from less than 20% last year. As we look ahead to the stretch run of the year, the slate is significantly stronger than last year's strike-depleted offering. November includes 2 IMAX-friendly releases in Predator: Badlands and The Running Man. We've used our leverage to program another strong Thanksgiving slate, locking in Zootopia 2 and Wicked for Good early. This put us in a position to get tickets on sale before most of the market, with both titles looking strong and tracking. And we continue to round out our slate across music, sports, gaming, and exclusive experiences. Building on our success with the Grateful Dead and Prince in August, we have a concert event with Depeche Mode next week. In December, we'll host the long-awaited re-release of our seminal Stones at the Max, the beloved 1991 concert film, which IMAX made with the Rolling Stones, and the only concert film shot entirely with IMAX Films cameras. In our second year, we'll expand our offering of the League of Legends gaming tournament next weekend in China with up to 219 locations. And we partnered with Netflix on a buyout promotional event in support of Guillermo del Toro's Frankenstein. Of course, the year concludes with Avatar: Fire and Ash. Our teams have been working with Disney on the launch for a year to ensure that the brand association between IMAX and Avatar that has yielded record-breaking success for our companies continues. With our network continuing to grow and our market share surging worldwide, we expect to deliver another strong performance with the franchise. With the carryover of Avatar, 2026 looks strong right out of the gate, highlighted by Christopher Nolan's The Odyssey, Greta Gerwig's IMAX exclusive Narnia, and Star Wars, The Mandalorian and Grogu, Super Mario Galaxy Movie, Toy Story 5, and Dune Part 3, which will have an IMAX 70mm run in select locations. Additionally, a very compelling 27th slate continues to take shape, including Joe Kosinski's Miami Vice, which will be filmed for IMAX, Star Wars Starfighter, directed by Sean Levy from Deadpool and Wolverine, Michael B. Jordan's The Thomas Crown Affair, Avengers Secret Wars, and The Batman 2. Our team was in London last month visiting the filmmakers and sets of many of these upcoming releases, including Narnia and Star Wars, and it's clear these are IMAX-sized productions leaning heavily into our technology and format. Our visibility into our Hollywood slate continues to grow, even as we opportunistically program local language blockbusters and alternative content events and experiences throughout the year. Turning to our networks business, signings to date have already surpassed the number of signings we had for the full year 2024. We're having a lot of success in international markets we prioritize for growth. In Japan, we're pacing towards our single best year for network growth ever, as we expect to end the year with 10 installations, representing a nearly 20% expansion of our footprint. And in Australia, we expect to install 6 new systems for the full year, more than doubling our footprint to 10 locations nationwide. Year to date, we completed 60% of the installations we've targeted for the full year 2025. The level of activity in the sales pipeline is also strong. We just completed an agreement for 2 new locations in Singapore. We've signed multiple agreements this year across 2 priority markets, France and Germany, and are in conversations for new locations in Italy and Spain. We're in discussions regarding new locations in the Middle East, and we continue to drive opportunity with new and existing partners alike across North America, including our recent agreement with Apple Cinemas and several potential new locations across the underpenetrated Southwest region. Given our continued sales momentum and our backlog of 478 systems worldwide, we have clear runway for strong network growth for years to come. In sum, we delivered excellent financial results in the third quarter. As the year draws to a close, we look forward to hosting an Investor Day in December and sharing our strategy for how we grow our performance over the next several years. We continue to believe the best is yet to come. As we look ahead to a year with no less than 4 massive tentpoles, The Odyssey, Narnia, Dune Part 3, and The Mandalorian and Grogu, for which IMAX is at the center of the filmmaking, marketing, and distribution. IMAX has never been better positioned creatively, commercially, or strategically. And we're focused on strengthening our position, executing with financial discipline, continuing to provide the most immersive entertainment experience on the planet, and delivering for our shareholders. Thanks, and now I'll turn it over to Natasha to walk through the financials.
Thanks, Rich, and good morning, everyone. IMAX's third quarter was one of the best in our history, showcasing our global scale, our agility in programming a diverse content portfolio, and in turn, the profit and cash incrementality in our business. Third quarter IMAX box office of $368 million was 50% higher year over year and exceeded street estimates by more than 25%. Signings for IMAX systems at the end of September was 142, already eclipsing full year 2024, and system installations are now tracking to the high end of our guidance range of 150 to 160 systems. From a profitability perspective, our operating leverage shined through in Q3 with an adjusted EBITDA margin of 48.6%, up a substantial 630 basis points year over year, and adjusted EPS of 47 cents, up 12 cents year over year. Our profit incrementality flowed through, contributing to cash from operations of $67.5 million, which set a new quarterly record and was up more than 90% year over year. As I said on last quarter's call, these are not just numbers. They are a direct result of growing demand by filmmakers, studios, exhibitors, and consumers for the IMAX experience. Our Q3 global market share reflected that, increasing 49% year over year to 4.2%, marking a new IMAX high. Our goal, though, is not to just outperform the market, but to expand it, drawing more consumers to theatrical, eventizing content while opening the aperture to bring audiences more of the entertainment they seek, whether Hollywood, local language, or alternative content. This works for us, but it helps our studio partners, it supports our theater customers, and it is responsive to consumer demand for the best possible experience. All of this has resulted in year-to-date performance that positions us to meet or beat every one of our full-year guidance measures. Taking a closer look at our Q3 results, overall, we delivered revenues of $107 million, 17% growth over the prior year third quarter of $91.5 million, and achieved gross margin in Q3 of $67 million, which grew 32% year over year. This resulted in a 63% margin, which is a 740 basis point improvement over the prior year period, reflecting high incremental profit flow-through from the stronger box office performance. Looking at our results at the segment level, Content Solutions revenues of $45 million increased 49% year over year, driven by the significant growth in IMAX box office, which, as Rich described, was propelled by a diverse mix of content globally. I am especially pleased with the programming agility we demonstrated. We released 4 fewer Hollywood titles in the quarter than the prior year, and yet we were able to grow box office 50% by consistently capturing higher opening weekend market share and leaning more into local language while adeptly filling in with alternative content. Overall, this led to the third quarter global market share of 4.2% on less than 1% of screens, driven by a remarkable 6.1% share of domestic box office. And the setup for Q4 looks very positive, with major titles in front of us, including Avatar anchoring the year. Content Solutions gross profit of $32 million showed tremendous growth, up 94% or $15.5 million year over year, while gross margin reached a record 71%, up a substantial 1,600 basis points from the 55% gross margin in the prior year, spotlighting the significant incrementality that results from higher levels of box office. Technology products and services revenues of $60 million was up $2.4 million year over year, with gross profit of $35 million, resulting in a 58% margin, up approximately 250 basis points year over year, driven by both growth in our global box office and maintenance revenues that more than offset a lower level of systems installed under sales arrangements. System installations in the quarter of 38 systems compared to 49 in the prior year reflected in part the more balanced timing we're seeing this year with a higher level of first half installations. As of today, we are at approximately 100 system installations, and as highlighted earlier, we now expect to be at the high end of our system installation guidance for this year. And the momentum for signings continues with 19 signings in Q3 and 142 September year-to-date, already exceeding the 130 for full year 2024. The diversity of signings is especially encouraging. We have achieved near record signings in Japan of 11 systems. Many of them are in new and exciting locations in underpenetrated areas in the country, and they're performing exceptionally well since opening. We've built momentum in Germany with the successful release of our first ever German language film in Q3 that resulted in a very strong opening weekend, and we expect we'll have 4 new German locations open by the end of the year. We are very excited about the growth in Australia as well, where we have had signings with multiple customers and expect to exit the year with 10 open locations compared to 2 locations a year ago. And in the U.S., we expect to expand with new regional partners, including 5 signings with Apple Cinemas in the quarter, with 1 in a highly desirable central area of Philadelphia. Operating expenditures defined as research and development and selling general and administrative expenses, excluding stock-based compensation, was $30 million in the third quarter, which was consistent with the second quarter, however, increased year over year as the third quarter of 2024 benefited from adjustments to performance payouts related to our SDT business and from the timing of capitalization of film camera costs. We continue to focus on looking for ways to better use technology and scrutinizing work processes to find productivity opportunities across our business. Overall, our strong operational performance led to a third quarter total consolidated adjusted EBITDA of $52 million, which increased $13 million or 34% year over year, driven by higher revenues, which mostly flowed through to gross margin. This resulted in an impressive adjusted EBITDA margin of 48.6%, up approximately 630 basis points year over year, and giving us a year-to-date adjusted EBITDA margin of approximately 45% relative to our full-year guidance of low 40s%. Third quarter adjusted EPS was 47 cents, up 12 cents year over year, driven fully by strong profit growth as our Q3 tax rate of 19% was a headwind of 3 cents year over year. Our September year-to-date tax rate is 24%, which is consistent with a normalized effective tax rate and what we would expect for the full year. Turning to cash flow in the balance sheet. Cash flow from operations of $67.5 million set a new quarterly record. This excellent result reflects the very positive incrementality in our model, as well as the timing of collections of the larger first half box office titles. September year-to-date cash flow from operations was $98 million and has already exceeded by 40% 2024's full year operating cash flows of $71 million. Year-to-date free cash flow before growth CapEx is $87 million and equates to an adjusted EBITDA conversion of 68%, a very strong result through 9 months. As previously communicated, we expected operating cash flows to show strength and growth this year. Similar to total adjusted EBITDA, the dynamics of cash flows are quite positive as box office expands, leading to incrementality, particularly considering the cash flow characteristics of our joint revenue sharing contracts, where the capital expenditure is at the beginning of an average 10-year contract term. Turning to investing cash flows, we continue to prioritize use of our available capital to invest in the business, including $24 million spent on growth CapEx year-to-date related to partnering with exhibitor customers to grow and upgrade the IMAX network through joint revenue sharing arrangements. This represents an attractive return on investment opportunity as numerous large partners, including AMC, Wanda, and Regal, are ramping up investment in IMAX as they upgrade their complexes, including bringing IMAX in to replace other premium formats as they look to capture more of the market share gains IMAX is delivering through our Film for IMAX program and the exceptional slate ahead of us in 2026, 2027, and beyond. Our capital position remains very strong, with a Q3 ending cash balance of $143 million, an increase of $34 million from the second quarter. In our capital structure is $230 million of debt from our convertible senior notes due in April 2026 that bear an interest rate of 0.5% per annum with a capped call leading to a $37 per share conversion price. With our strong liquidity position and available facilities, we have the ability to be opportunistic as we assess the timing of when to address these notes and the nature of the instrument, whether that be with our revolving credit facility or through new notes. Debt, excluding deferred financing costs, was $261 million, and our current available liquidity is approximately $544 million. In conclusion, the team continues to execute well. We are successfully capitalizing on our strengthening position in the theatrical ecosystem and the growing contribution we can make to the industry. We are deepening partnerships with studios and filmmakers, programming with agility our global commercial network of over 1,750 locations, connecting with our fan base to bring more of the Hollywood, local language, and alternative content they're seeking out, and partnering with existing and new exhibitors to bring the IMAX experience to more moviegoers. The model is working. The operating leverage we have discussed is coming to fruition. We are gaining market share and meeting or exceeding expectations across our guidance measures of IMAX box office, installations, and adjusted EBITDA margin. But to be clear, we are not resting on our laurels, and we are focused on delivering results through the end of the year and beyond. As we look past 2025 into 2026, there is good visibility into IMAX's future system installations as well as the film slate. We have a backlog of nearly 500 systems and an addressable market less than 50% penetrated with potential for additional zones. We also have an increasingly clear view into the film lineup for 2026 and beyond, including significant mega title catalysts on the horizon. We believe IMAX has never been in as strong a position, and we have scheduled on December 4th our first Investor Day since 2017 to share the compelling opportunity we see in front of us, how we will execute to capture it, and in turn deliver strong shareholder returns. We'll dive deeper into what we see as the next era of IMAX, expanding our global content pipeline, accelerating network growth, and advancing the IMAX technology that continues to redefine the cinematic experience. With that, I will turn the call over to the operator for Q&A.
Thank you. At this time, we'll conduct a question and answer session. As a reminder, to ask a question, you'll need to press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Now, first question comes from the line of Eric Handler of Roth Capital. Your line is now open.
Good morning. Thanks for the questions. I wonder if you could talk a little bit about your margin potential. I mean, 71% for content solutions off of a record box office. I'm curious, and you had 100% incremental margin off of that. So at what point does your box office, where does the box office get to where all of a sudden you see just margins start spiking? And then as far as the costs are concerned, how stable are the costs in the content solution business? And is that number going to have to grow as you continue expanding, or is that something maybe with AI you can keep flat or maybe even down?
Morning, Eric. Thanks for the question. We're so pleased with the operating margin in the quarter. The 71% is a high for us, and we've talked about this many times about the incrementality in our model, and I think Q3 was the perfect opportunity to display exactly what we reference when we talk about over levels of $250 million in a quarter of box office and how the incrementality flows through at essentially an 85% rate. And it could be higher. It just depends on what our costs are that we choose to do for marketing and some of the discretionary costs that we have. But there is a lot of opportunity to continue to grow our margins, and especially as you hit the even higher levels of box office, which is obviously a record year that we're trending to this year with the $1.2 billion. And from a cost basis, when you look at it, we actually don't have a significant increase in cost expected, just because the basis of our costs are pretty stable. We remaster and we find efficiencies and operating leverage in that, because as you distribute to more countries, it doesn't cost us any more money. We're already doing versioning and marketing in all of those countries. And on the SG&A side, we've been able to keep everything relatively flat with small amounts for inflation each year. And I think we've done a really good job on that front as well. And so overall, our goal is to continue to show increases in our margins and allow the flow through to happen all the way down to cash.
Great. And then, Rich, as a quick follow-up, as exhibitors can see that your market share is growing quite nicely. I'm just curious, as theaters see more film for IMAX movies coming, you have the halo effect raising the market share for non-FFI movies. Is the volume of requests for proposals just skyrocketing at this point? Or, maybe you could talk about that dynamic a little bit.
Yeah, I mean, as you know, we already beat last year in signings with a quarter to go. So we actually delivered more signings. But yes, there are a lot of activity going on around the world. Yeah, and I think it's not just, looking backwards, Eric, at what FFI was, but it's looking forward to 26 and also 27 and 28. We've never really had a backlog of films going that far forward. And I think if you're an exhibitor and you're looking at your return on investment and you look at the number of films that IMAX has coming out in the next few years, and I would even add to that, even FFI films, I don't remember the exact number, but I think for 26, we have double digits of FFI films already ready to come out, and we're doing FFI films in 27 and 28. So I think, the way you asked the question kind of answers itself. The fact we've done so well, and 26, 27, and 28 are filling in advance, have driven a lot of activity in the market.
Thank you.
Thank you. One moment for our next question. And our next question comes from the line of Eric Wold of Texas Capital Securities. Your line is now open.
Thanks. Good morning, Rich and Natasha. I guess kind of following up a little bit on the last question on the exhibitor kind of demand side, thinking about from the other way. I guess as you think about the limited amount of real estate for content that you have each year, and understanding that for example 26 is mostly spoken for with content already under contract. I guess what is the best opportunity to really drive from your end or work with the exhibitors to drive greater box office revenues on that content? For example, where can you further leverage marketing to drive attendance and drive people into the theaters on that content? And I know you can't necessarily push price from your end, but why aren't we seeing more ticket price leverage, for IMAX films from the exhibitors, given the clear demand from moviegoers, especially given the limited runs that most of your films have in their theaters? Why aren't they taking price even more so on IMAX films?
Eric, first of all, just to put it in context, when you said there are a limited number of slots, I just want to remind you that this year we'll have 140 pieces of content. So it's not like we can't program, more things or multiple things at the same time. In slower times of the year, we could have 2 or 3 films sharing screen time, and we've been doing that. So there is room to fit more content. And in terms of price, as you saw with the Odyssey, we put some film tickets on sale a year in advance, and the ones we put on sale sold out. So that's usually a sign that under price elasticity, you can raise the price. As you correctly said, that's a decision the exhibitors have to make, but not us. But particularly in a year that's heavy in film like 26 with Odyssey and Dune and some other things that'll be coming out, I wouldn't be surprised to see exhibitors press it a little bit, particularly in the film area. And then finally, obviously, the name of the game is capacity utilization, which is related to market share. And this year, as our market share has grown so nicely, capacity utilization has gone up. But still, capacity utilization is relatively low, as it is in a lot of entertainment businesses. And I think there's an opportunity in that area as well.
Thanks, Rich.
Thank you. One moment for our next question. And our next question comes from the line of Drew Crum of B. Riley Securities. Your line is now open.
Okay, thanks. Hey, guys, good morning. So I had a couple questions on 2026. I guess you're likely to address this at your Investor Day, but any preliminary thoughts on 1Q and your ability to grow box office as you lap a tough comp from Ne Zha 2? And then separately, I noticed in your press release and your prepared comments, you highlighted 4 massive tentpoles. Absent from that was The Avengers, which I think historically has enjoyed success on IMAX screens. Just curious if there's anything to read into that omission. Thanks.
No, dating, though, typically a year in advance moves around. So it's very hard to pinpoint exactly what the movies are going to be and what dates they are. So I think we're just trying to be conservative in what the slate is looking like. And I think the point we made was that we have 4 or 5 movies next year, which include in the first quarter the carryover of Avatar. It includes Mandalorian. It includes Odyssey. It includes Narnia, and it includes Dune. So, actually the question you asked, we had a board meeting yesterday about the comp of, Ne Zha next year. But, I just named to you 5 movies that, I think will exceed whatever their comp was this year. So as you know, we're a diversified portfolio, and you can always in any year say, well, you have this really good film. How are you going to replace it? And the answer is you look at the whole slate and you look at how it's going to come together. And, we'll, at our Investor Day, talk about guidance for 26, but, suffice it to say that looking at it very early, we think it'll be stronger than 25.
Got it. Thanks, Rich.
Thank you. One moment for our next question. And our next question comes from the line of Omar Mejias of Wells Fargo. Your line is now open.
Good morning, and thanks for the question. Maybe just more broadly, you recently announced the first IMAX Investor Day since 2017, and I'm just curious, why is now a good time to get together and share what's ahead for IMAX? Just if you could share what you're most excited about for IMAX in the years to come, that'd be great.
I mean, Omar, not to be kind of an a-hole about it, but I think we have a lot to talk about in terms of how 25 performed and how 26 will perform. And it kind of flows off my answer to Eric Handler's question. I mean, there's never been a film backlog the way there is now. And even like I said to the last question, I think we'll provide a lot of context around some of those movies, of which we've seen a lot of them and we know a lot about them. And I think just putting titles on a slide is different than giving a context. But I think IMAX isn't a 1 year or a one-trick pony. I mean, we think we have sustained growth going for years ahead. And I think we thought it was really important. We believe we have a new level set for IMAX. So as you probably know, films that we used to do 10% of the box office, blockbusters, we're now doing 15% of the box office. Again, a question that was just asked about the activity on the theater side and signings, what's going on. We just think, it's the right time to put the story together and put numbers to it. And so obviously our stock has had a nice little run. But from our point of view, we think it's the beginning of the run. And I think we have a lot of data to support that. And then I'd say one other thing would be since 17, we have a lot of new talent in management that a lot of investors have never met. And I think it's just a good idea. I know Natasha and Jen and I have met a lot of investors, but we have a pretty deep bench, and we think it's a good time to let the investors talk to that bench and get their color on things.
Great. And maybe just a quick follow-up on the global opportunity set. You obviously have momentum in the business and a great 4Q slate ahead that ends with Avatar, Fire and Ice. What countries or regions do you think IMAX has the biggest opportunity to drive incremental installations and grow the network? And any color on that would be helpful. Thanks.
So the reason that's a hard one to answer is because of my last answer, which is that there's been kind of this reset in what the box office could look like. And when you start to put in numbers in that reset, the ROIs look differently, and our ability to invest in JVs and make a better return look differently. So I think we're really, assessing how to generate more growth around the world. So, if you look historically this year, Japan has been very strong. Western Europe has been very strong. Even North America has been very strong. And, we announced a couple of deals there. And I think there's more to come in North America. But I don't want to be constrained so much by the past. And that's the kind of thing we'll go into more detail on Investor Day. Because I think the performance and the numbers open up different opportunities.
Thank you.
Thank you. One moment for our next question. And due to time, please limit yourself to one question. And our next question comes from the line of David Joyce of Seaport Research Partners. Your line is now open.
Thank you. In thinking about your programming strategy, how do you weigh, the pros and cons along with the various economic impacts of running concert films or rerunning a recent release like Formula One or an old one like Jaws, granted the 50th anniversary, versus showing a new theatrical release like Jurassic World that you were not able to show earlier in the summer?
Yeah, well, just, to get the facts straight, Jurassic World came out the same week as F1 did, and we had committed to F1 already. So, that's the first rule, is that when we commit to something, we sign a legal contract, and we can't, change that, although, we could try and fill it in from show to show. But to the core part of your question, not every week has films that are going to break out. So we try and use alternative content or local language films more in the slower periods, or bring back, as you asked about. So, we look at our calendar for this year and next year. And, for example, we know that on July 17th, Odyssey is coming out. So obviously we're not going to bring back a film or show a concert film that weekend. But, at other weekends, there's just no big releases coming. So we know that way in advance, so we'll make plans for how to fill in the schedule. And one thing, another context to put it in, is we recently hired someone who has experience doing programming on the exhibitor side. And they're working with our distribution team to try and maximize the box-by-box programming with our Chief Content Officer, Jonathan Fisher. And, if you look at the third quarter, that's the perfect example where we plugged in a lot of things and we mixed and matched. So just one example, because it comes to my mind, is the weekend with weapons open, we played weapons a lot, but not everywhere, and it did really well. But Formula One still had a lot of gas in the tank, and to use a bad analogy, but that is now close to $100 million. So we're able to mix and match a little bit more, and particularly in the periods where there's no obvious winner. And Q3 was the perfect example of that. That's what really drove the outstanding box office.
And is there a margin differential? Like, is there marketing on some sorts of content that tilts the scale for you one way or the other?
Not really, because for example, we brought back Jaws, but we timed it to the 50th anniversary of Jaws, so we didn't have to put up a lot of the marketing. The studio put it up in connection with the 50th anniversary. Or this weekend, we're playing the Springsteen concert. And what we did was, that was timed to the theatrical release of the Springsteen movie. So it comes with a lot of marketing. So, as we try and figure out what slots to put them in, one of our considerations is not having to put up significant incremental costs.
Great. Thank you very much.
Thank you. One moment for our next question. And our next question comes from the line of David Karnovsky of JP Morgan. Your line is now open.
Hey, thank you. Maybe just two quick ones for Natasha. The full year guide implies a little bit lighter of margin in Q4. Just wanted to understand the puts and takes there in terms of install mix, box office, or whether there's any kind of marketing consideration for Avatar. And then just similarly for working capital, how should we think about the balance of the year, given those big titles sitting in the final weeks? Thanks.
Sure. David, I'm not sure I heard the first part of your question, but I think the second part was about SG&A and then box office, correct?
No, the question was basically about margin in Q4, the guide implying that being down a little bit from what you've done year to date. Just wanted to understand puts and takes there, and then the outlook for working capital, given Avatar sitting late in the year.
Yeah, so our guidance for EBITDA margin was updated to low 40s in last quarter. Year to date, we're at just under 45%, at 44.9%. And, the first half was at about 43%. So I think the individual quarters, obviously, they drive different margins. But we have said this before, that Q4's margin, we expect that we'll have incremental dollars for Avatar marketing, which we'll spend in Q4, but the Avatar box office will come in not only in Q4, but then we'll get it in Q1 as well. So you'll have lower costs in Q1 with respect to marketing on Avatar. And then Q4, from a cost perspective, we'll hold a few more events versus Q3, for instance. We obviously attend several conferences along with our investor day that we're planning in Q4. But other than that, there would be nothing that significantly hinders the margin from continuing along its pace towards our guidance of low 40%.
Working capital?
And on working capital, from a cash flow perspective, this was a record quarter for us. And, as I look at cash flow, and we've talked about this before, but when you look at cash flow on an annual basis, that's essentially what we're aiming towards, continuing to grow that conversion rate. Hitting at above 50% and continuing to grow that on an annual basis is essentially where we keep moving, and I'm sure we will work towards updating and providing more insights and guidance into our cash flows in the future as well at Investor Day.
Thanks.
Thank you. One moment for our next question. And again, as a reminder, please limit yourself to one question. And our next question comes from the line of Mike Hickey of The Benchmark Company. Your line is now open.
Yeah. Hey, Rich, Natasha, Jennifer, congratulations, guys, on a great Q3. First question from us, just looking at your market share here year to date, slide 11 in your deck, 3.8%, definitely setting a record. Looks like domestic 5.2%, China 5.3%, and rest of the world 2.4%. So I guess the question Rich, is how you're thinking about rest of world market share gains relative or, to your forward growth targets. It seems like rest of world could be a great unlock opportunity for you, or is there something structural holding you back from achieving sort of the market share that you're seeing in the U.S. and China? Then I have a follow-up.
Yeah, the only thing holding us back, Mike, is more theaters. So obviously in growth markets like Vietnam and Indonesia and places like that, we have much less penetration. In India, so you have lots of screens, big populations, and not as high a percentage of IMAX theaters. So obviously we'll target those, which ties to an earlier question, and try and build up the theaters. But there's nothing endemic about those markets. Just there's not as many IMAX theaters. And by the way, it a little bit goes the other way, because as we double down on local language films, like we've had local language in Malaysia, in Indonesia, in Saudi Arabia. As we step up our local language, that will obviously increase our market share in those territories. So there's nothing broken. It's just an opportunity that we need to fill in more.
All right. Thanks, Rich. And then last question. Promise I'm not being a wise guy here, Rich. Just on your installation growth potential for 26. Curious your thoughts there, just given the extreme success you guys have had in 2025, which might be slightly a pull forward or not, but just curious your confidence here on 26, and those signings have been very strong.
So let me be clear. There's no pull forward there. It's a result. The reason for the high end is we had a really good signings year, and we have such a good slate ahead of us in 26 that I feel, very good about where we are this year. Obviously, we raised the range of our guidance. And for next year, Mike, if you look at the correlation between film slate, film for IMAX, the large movies, it should be a positive year. Again, however, we're in the middle of our budgeting process, and hopefully by Investor Day, we'll be able to give you more concrete guidance.
Nice. Thank you, guys.
Thank you. One moment for our next question. And our next question comes from the line of Pat Scholl of Barrington Research. Your line is now open.
Thank you. I just had a question on alternative content. I mean, you laid out your visibility for the broader Hollywood slate. Can you just talk about the visibility that you have into the alternative content to sort of even out those box office periods?
We have some visibility, but a lot of it arises, in a couple months before it comes out. And, we're doing, I think it was in my script, I don't recall, but we're doing the League of Legends in China, which came about. It got finalized, 2 weeks ago. And we're doing over 220 theaters for the finals. And then we're doing the semis and the quarters. So it's both. Some things, will be like we have two music projects, one in February and one in May, which we're in the middle of documenting right now. But on the other hand, there will be other projects that will come up more or last minute. And some of the live events where directors speak around their movies, that tends to come together a little bit later. And the sporting things, I think, come a little bit later. The music, especially the music docs, they come more in advance because the studios know when they're being released. So it's a combination of the type of content.
Okay. Thank you.
Thank you.
Thank you. We have time for one last question. And our last question comes from the line of Steven Frankel of Rosenblatt. Your line is now open.
Thank you. Rich, you guys have pointed out that local language is consistently been over 50% of the box office mix in China over the last couple of years. Do you think that's a permanent change, that your penetration into tier 3 and tier 2 markets means more local language? And can you do things to kind of accelerate that local language growth in China going forward, if you think maybe Hollywood is peaked as part of the mix there?
Yeah, I mean, I wouldn't get pinned down to an exact percentage, Stephen, but I do think that local language is, permanently going to be a bigger part of the box office than it was before. And I think you put your finger on one of the answers, which is, because of tier 3 and 4 markets and our increased penetration there. So, and I also think, and this is important, that, we've done a better job of penetrating the local markets there. So, our CEO there, Daniel Manwaring, is extremely connected in the film industry there, and our team has done a very good job, and, the results speak for themselves. With that said, I wouldn't give up on Hollywood box office. So, for example, Avatar traditionally does very well in China. It's getting in the same day as it got in the U.S., so I would expect to see strong results there. Zootopia at Disneyland in Shanghai, there's a separate part of it called Zootopia Land. So it's a very big franchise over there. Looking into 26, the Nolan movies do very well, and obviously the Odyssey is a very high-profile one. Dune has done well there in the past. So, again, that's why I'm not sure about particular numbers and percentages, but I do feel like local language will continue to be strong. But don't give up on Hollywood quite yet. I mean, and you should just be reminded in that context that our take rate on local language is higher than our take rate on Hollywood films in China. And that's because of the theatrical splits. It's not an IMAX anomaly. It's just Hollywood films get a lower split than local language. So financially, that's a pretty good thing for us to keep in mind.
That's very helpful. Thank you, Rich.
Thank you. This concludes the question and answer session. I'll now like to turn it back to Rich Gelfond for closing remarks.
Yeah, thank you very much, operator, and thank you all for joining us today. I mean, IMAX pre-pandemic was on a tremendous growth curve, and as you know, 19 was our best year ever at that point. And then, unfortunately, not just for IMAX, but a lot of the world, the pandemic slowed it down. And we've been using the time since the pandemic to build up a lot of different pillars for future growth. And they include things like local language content, different ways of looking at marketing, alternative content, not just local language in one country, but across many countries, rationalizing our cost structure. And I think in 2025, I mean, we saw good years in 23 and 24, but all that really came together and we kind of broke out. And I think if you want to find a quarter that epitomizes that more than anything else, it's the third quarter we just finished. And I said this during my remarks, but I think, you can't summarize it any better than to say, the North American box office was down 11% in the third quarter, and the IMAX box office globally was up 50% in the third quarter. So if that doesn't show, how we've separated ourselves from people in different businesses that some people confuse, I think this quarter, painted a very clear picture. And, as you could tell from Natasha and my tone on the call, when you look at the slate and you look at a number of other factors, I think we're very optimistic that we can maintain kind of that momentum going forward. So thank you all very much, and we'll talk to you, hopefully see many of you at Investor Day.
Thank you for your participation in today's conference. This does conclude the program. You may now disconnect.
All right. Pretty cool that they're going to have an Investors Day. I'm looking forward to that. Let's see. The market is open now. Our cinema stocks, AMC up slightly, IMAX up about 0.5 point, Cinemark up 1%, Dolby in the red. GameStop this morning, not Cinemark, GME. GameStop this morning, 22.55. Very, very close down here to the point where I'm ready to add to my GameStop position. If we could just please slip under 22 for a day, I'd take it. But it looks like maybe that's not going to be today. The other tickers we were looking at yesterday, Beyond down 20%. I saw a few of you in the chat asking, do I think Beyond is going to come back? Look, these momentum trades, you just need to follow the chart, and the chart was weak in extended hours in pre-market. So most people that I'm talking to are out of the trade. We got out of it if you were in it. You know, we were exiting before or during the big downturn. If you're new to day trading, momentum trading, squeeze plays, FOMO plays, use this one as a lesson. A lesson to social media is fun. Social media is not trading advice. The chart decides your flow. Don't try and catch falling knives and have an exit plan before you get too far in the red. Especially, I don't even want you to get in the red. I want you to get out while you're in the green, which is what I was talking about for 2 days. Get out while you're in the green. IMPP up this morning 5%, $4.91. And YYAI, that one just cratered back down to 8 cents. So we probably are not going to be talking about that one anymore. That was just one we were watching overnight in case people rotated from Beyond into YYAI for a momentum trade, but that looks like that is not happening. So we can forget about that one. Any last minute questions? Otherwise, I'm gonna sign off, refill my coffee, cook some breakfast, get all the pets fed, etc., etc. Evil Genius says, I wonder what happens when a theater with IMAX closes. Does IMAX repo the tech? Yeah, generally, most of I think, I don't know the exact breakdown, but I'm pretty sure the vast majority of IMAX equipment is leased to these theater operators, and they pay them back through the revenue share, through the higher prices that you pay for IMAX. So if a theater goes out of business, I mean, it's a good question. Does the landlord possess everything? Hopefully, it's an orderly wind down. If a screen is closing, and IMAX can come in and repossess their equipment. But sometimes, you know how landlords are. They get everything inside the building. I don't really know how that works, but you would presume that IMAX would come get the equipment because they own it. And yeah, there is some cost sharing when you're building out a Dolby screen or a 4D D-Box auditorium or an IMAX auditorium, where Dolby, D-Box, IMAX are absorbing some of the cost. It's not like AMC's fronting all the money. But I just kind of imagine it. It's hard to get these guys to answer my questions. I only know what I've been able to dig up through a lot of research. I would imagine that the exhibitor or the landlord is absorbing the construction cost, a large portion of it. The landlord, if they're renting, or the exhibitor, if they own. And then a lot of the equipment that is relative to the PLF is least, low capital upfront cost to the exhibitor like AMC. Richie Rich says, beyond day 3 morning yesterday, had a hard time at 6 out of the gate. Toast after that. Yep. Moik says, should I exit beyond? I bought 500 at 390 yesterday like an idiot. We don't like chasing fallen knives, Moiky. I would say, the chart is telling us this trade is unwinding. It's at $3.05. I exited the trade on Tuesday, and I did try and get a re-entry yesterday while it was slightly over 6. And as I was buying it here with you guys, I'm telling you my own rules. I'm not going to ride a trade like this that was up 1,000%. We know they come down fast. If you see it turning against you, you got to have the discipline to get out. If you think it's the trade of a lifetime, you can always, well, hopefully you're in a cash account and you have cleared cash, or you're in a day trading account. You could always get back in, but you do not want to ride these things all the way back down to $1. Be disciplined, have a plan before you buy, and follow your rules so you don't end up in the red on these trades. Anya says, in most cases, the IMAX Corp keeps the projector and related equipment when a theater closes because the equipment is typically leased. Yeah. Yeah, Moik, don't worry. If you got a little red on Beyond, it's not the end of the world. There's literally good trades almost every morning. Set up a good screener on your broker. Even like Webull here, it has the top gainers, and you can just look in pre-market. You can set it for pre-market 5 minutes during the trading day. It'll tell you what's moving. But that, if you're not a normal momentum or day trader, you still need to use some education, some experience to figure out which one of these tickers are even worth your time. If you got 10, sometimes there's only 1 or 2 that are actually good trades in pre-market. But there's good trades almost every single day if you can wake up at 4 or 5 a.m. and catch them early. Catching them early is really the key. A lot of days I just don't, I'm not up at 5 a.m. If I am, I'll be looking at these. Moik says, any recommendations where to put the cash before I put it back into GME? IMAX? Cinemark? Well, we need to have a weekend powwow of where else to put our money. I mean, I am a big believer in being diversified. So if you already have a healthy investment in GameStop, then I would be looking for somewhere else to put any gains, losses, whatever from money you took out of Beyond. I'm not going to be that guy that tells you put all your money in one speculative trade like GameStop. I own GameStop. I'm long GameStop. It's one of many tickers for me. It's nothing special. We need to see demonstrated multiple quarters of growing revenue and growing margins. They're just on the cusp. There's no guarantees with GameStop. Taha Daouk says, can you guys see my comments? Yes, we can. We can. Moik says, I'd be interested to hear your bull case on IMAX. Typically, later today or tomorrow, I will do a recap of the earnings and some thoughts about IMAX going forward. So look for that in the next day. And last time we really looked at IMAX, and I did my forecast, I had this price target. I was buying IMAX back at $15. I said that my 12-month price target for IMAX, well, that was $21.25, and then I upped it to end of year 2026, $32. We're already over that. So now I need to sit down and recalibrate. What is my 2026 target now? Is it still $32? Are we at the maximum, or do we have room to go up? So I need a day to sit down and look at the new numbers. Taha, let me see if I can find your question. Oh, VTYX. Biopharma. Up 82%. What they have news today? Oral heart disease drug cuts inflammation in mid-stage trial. Mid-stage trial. All right. Let me guess. They have no revenue? VTYX. Yeah. I mean, you're gambling on biopharmas that have no revenue. They only have expenses. They're mid-trial on a drug. They're selling shares to raise money, which is normal for a bioscience. So you're dealing with dilution, negative earnings. I don't give advice on bioscience companies because what do I know about how long is it going to take for the trial to be done? How many years you got to wait for them to monetize this? Can there be good finds, good investments in biopharma? Absolutely. But there's far too many companies for me to keep up with. And it's not really my area of expertise because for me, it's very educated gambling. You need to become an expert in biopharma and know who has promising candidates and where everything is in the schedule. Other than that, it's just gambling. So I typically don't trade them. If I was going to trade any pharma company, it's somebody that has demonstrated revenues, existing products, things I can forecast with reliability. That's just me. Doesn't mean that you should stay away from them. I stay away from them. And that is from many decades of watching them. I just, not my area of expertise. There's often beautiful plays here for people that understood the company and got in at the right moment. I don't have the time to go research all these biopharmas. But you know who does? Martin Shkreli. I know some of y'all hate him, but if this is an area of interest, he's a guy to ask questions. Someone said Beyond is moving now. Yeah, it is. It is coming up a little bit. That's good. It's going to be a battle. Beyond is going to be a battle between the bears trying to push it down and the bulls trying to fight back. I'm not super optimistic for it as we go into Friday close, but occasionally these things come back to life. I would expect, this is just my guess, that the bounce on Beyond happens closer to $2 than $3. But I could be wrong. We'll see. That's going to be my guess for the day. And we'll come back and check this one later in the day. Thank you guys. Have a good morning. And we will see ya on the next one.
Down by the dip, got a hold our ground. We've been waiting for so long. Edges rain will soon be gone. A green candle up, a red candle down. By the dip, got a hold our ground. Edges down.